Okay folks, in this video we are going to be giving a violent update on plays. Specifically one of our plays that tripled today at highs, and then BBBY, which rallied over 35% at some points, mostly on the catalyst that we were discussing just yesterday. What do you need to know moving forward? And then for the main entree this lovely evening, I hope that you are very, very hungry, because we are going to be grilling up a storm. I want to discuss with you one stock that I believe has a solid likelihood of 2xing in the upcoming weeks, and I'm going to lay out my case. We will put all the timestamps down below. And this video is sponsored by ZipTrader U and our 50% off for session 50 coupon code. If you want to lock in lifetime access to our step-by-step lessons, private chat, daily morning briefings, as well as our full price target list, I will put a link to that down below. Coupon code expires a week from today at midnight. Okay, so let's go ahead and start with AVCT. This was certainly the most exciting briefing play today. This morning when it was trading at just 16 cents, we briefed on it because it was showing unusually high volume and interest in the pre-market for such an extremely small cap stock, and that of course makes it ripe for a post-market rally. And it ended up going from 16 cents to over 49 cents, which is slightly more than a 3x. And very, very strong shout out to folks who played this well, managed your risk, went in with a clear trading plan, and profited. But the lesson here, and it's incredibly helpful for folks who didn't play this, but the lesson here is filter and identify stocks that not only have previous histories of massive rallies, but are also showing proof of concept in the moment. And this one was a pretty by-the-book example of that, right? If any day you wake up and you find the stock has gone up 150%, find what characteristics that stock had that set it up to run. And then in the coming days, look for other stocks that have those same characteristics, and mark my words, a certain percentage of those as well will also have massive runs. Now, a lot of folks ask, Charlie, why do you even bother with super small caps? And this is why. Because you have the potential for such aggressive moves. Apple isn't going to move 200% in a day, right? But remember, with great volatility comes great responsibility. And that means having risk management and a clear trading plan. I'd argue that many people lose just as much money on winning plays as they do on losing plays, because regardless of how much the stock goes up, many retail traders absolutely refuse to lock in profits. They don't have a clear exit plan, and if they do, they sure as shit don't follow it. When they see it go up, they're like, oh, I better hodl. Why can everybody else in the market lock in profits, but retail traders, they're told they can't. They have to hodl no matter what. They have to go and make sure that their position's turning red before they can sell out. No, folks, it is my view that when you get the profits, you got to take them. And also importantly, remember that not every stock that you find that has a similar setup is going to do well. My goal, and your goal as well, should be to find setups that have the potential to run and then wait for the proof of concept. This one, we had a very favorable setup and it showed proof of concept throughout the day, and it ran quite a lot. But not all of our favorable setups run, and not all of yours will either. Okay, moving on. Bed Bath & Beyond is indeed turning back into Bed Bath & Boom. She had a bit of a hero's journey today, up to $14.88. Now, our thought process after the Ryan Cohen sell induced a draining of the proverbial bathtub was that while it was dumping fast, the short squeeze setup was still extremely solid, and I continue to think so. And then it started bottoming, and our thought process was it's going to be even more difficult to get sellers the lower you go, and you're going to start seeing that opportunity for some bouncy McBouncy. And then my thought process last night was that, hey, BBBY, it's showing some signs of bottoming, it's showing some beautiful proof of concept, and at the same time, it has a clear catalyst coming out on Wednesday that the market is very, very aware of, which in my view made it and has continued to make it likely to see some outsized moves before then. But what's the story though? Well, according to Investor Place and the Wall Street Journal, suppliers reportedly have mounting doubts about the firm's ability to meet its financial obligations, causing vendors to offer less credit to BBBY. And at least one firm that finances suppliers has stopped providing credit on shipments to the retailer. So BBBY is in a dire situation and they need some capital, right? Capital with a capital C. How are they going to get it? Well, on August 24th, Wall Street Journal reported that they are close to obtaining a loan for $400 million. But you see, the catalyst here is that on August 31st, this coming Wednesday, CEO Sue Gove will be holding a press conference where she will, for the first time, really disclose the strategies and moves that they are making to get Bed Bath & Beyond out from this mess. Wedbush expects the update and recent financing to ease near-term concerns. And while I'm never going to make a fundamental argument for Bed Bath & Beyond, the tradable opportunity here on hype is really quite real. I give it a solid chance of continued breakouts heading into Wednesday, but post-catalyst is going to be key to see if the momentum can continue. If they lay out a solid plan that doesn't involve the evil D word, dilution, then I would not be surprised to see this push back deep into the 20s, which then would prime it for perhaps a breakout past where Ryan Cohen sold. To be clear, at this point, based on what we know, I think that's still the minority case probability. But if this shows the proof of concept, if after the meeting on Wednesday you get not a massive sell-off but a new momentum wave, well, then I would not be surprised if you can see this start skyrocketing to previous price points where it gamma squeezed. Okay, next, the stock of the hour, Mr. Weber. We did have this one in our top 5 squeeze stock list last week, but it really deserves a deeper dive. But what is Weber, Charlie? Well, Weber manufactures grills and other related accessories. If you grew up in the United States and your family barbecued, you have probably used one of these at some point. They control a massive market share. And quite frankly, in my opinion, there is no better vibe than sitting out with the family and maybe some friends and barbecuing on a hot summer day, which means, of course, that short sellers hate it. They hate barbecuing, they hate barbecue manufacturers, and they hate you for barbecuing. Short sellers want you to wake up at the crack of dawn, go to work all day like a dog, and then come straight home. And every single dollar you make, they want to go straight to housing, so that at the end of the day, you have no money left over to spend on any extra joys. So all of the companies that sell those extra joys can go bankrupt, and their short positions will be very, very profitable. If you are someone that does something besides work and sleep, you are a huge threat and a disaster for short sellers. And with Weber specifically, short sellers are praying every single night that you will not be able to afford to partake in a simple American pleasure, barbecuing. Because the less that you can afford to buy a grill, the more they can afford to buy a yacht. They don't like you, they don't like America, and most importantly, they don't like barbecued meats. And for you vegetarians, you think you're off the hook? No, I don't even want to get into the short interest situation on Beyond Meat. Of course, I'm mostly trolling here, but at the end of the day, Weber's short interest as a percentage of free float is at 55% according to Ortex. And you have this situation where its price is much, much cheaper than it was a year ago, yet its short interest is much, much higher than it was a year ago, which is sort of like the short seller playbook. No conviction, no real analysis on a stock, just simply dumping shares in stocks that are already getting destroyed, right? And it's effective, I'll give them that. Easy money. But when a stock has been overly shorted and it's reached areas that represent something along the lines of a floor, you get these periods of time where you get the ricochet effect, and you have these massive spikes as buyers say, wait, this price is a pretty solid deal, and that causes some bidding up, which tends to skyrocket the price due to the low availability of shares and the locked up float. But the second spiky has resulted in a retention of value significantly higher than the previous one, with the stock trying to attempt upward again. And feel free to call me high maintenance. I am proud of it. I like to see stocks that show some damn proof of concept. I don't want little dead dogs on the side of the street and you're like, oh, you want a puppy? And I'm like, no, actually, I'd rather not have that one. That one's dead. So far, Weber is indeed showing proof of concept of at least retention and relevancy. And when you see that with such high short interest, it becomes a big short squeeze candidate, right? So my thought process moving forward is pay close attention to what the web of the R is doing this week. In terms of crucial points, this rally you see right here is trying to do one thing: get past these previous breakouts. A push past 12 and into 13 and beyond is extremely significant because you'll get past not just these two spikes, but pretty much all of the ones year to date. If you could do that, that's going to be massive. Think about what happens when you've broken past all of the highs year to date. Well, all of a sudden, all of the new shorts that consistently added onto their positions this year are in the red, and risk management goes out the window if they don't start readjusting, right? If you went into a short position expecting it to dump massively and consistently, and then all of a sudden you're massively red on that short position when you were green all year, and the entire thesis has changed, well, guess what? Now it's time to start adjusting or your risk management goes out the window. And if you really want to get deep into the details of elevating factors, you also have a bit of a speed ramp for Weber to travel across. You pull up the options chain and calls expiring September 16th. You have huge concentration at 10, which is just above where we are trading at. And then you have 1250 and 15 and 1750 and 20. All of these options have relatively high concentration at levels that could easily be hit if the current momentum that we are seeing continues. When previously low probability out of the money options suddenly become higher and higher probability, what happens? Well, market makers who originally wrote them expecting them not to have to be paid out, well, all of a sudden they have to figure out how to stay neutral. And usually the main way of doing that is by going and actually buying a percentage of shares to hedge against the possibility of having to pay out. Which means that if this does pick up enough momentum, you get all these market makers going and buying in, and then of course you have the short sellers that may be adjusting to better risk manage, and then all of a sudden you get more of a traditional squeeze, and probably you get some squeeze speculators and the rest of the market going and saying, ooh, I can rally up the rally, and then further accelerate it until you get the massive dump that ends this process. So maybe you think I'm crazy, and perhaps I am. But in conclusion, when I'm looking at the setup on Weber with it trading at just under $10, I think there's a strong likelihood, at least a solid likelihood, that it doesn't just break to 15, but actually goes the full round to double at $20. Why do I think that though? Well, quite frankly, because I think that the shock potential and incentive of blowing through strike prices at 10, 12.50, 15, 17.5, and 20 should be enough to induce a massive gamma squeeze at the same time that short interest is more than half the available float. If more than half the available free float is sold short and the majority of that becomes unprofitable and then deeply unprofitable as Weber climbs higher, it becomes a higher likelihood that the higher leverage shorts backtrack to risk manage, and that backtracking chases up the already very limited float. You throw in some momentum traders and some potential hype as a next-gen meme stock, and all of a sudden you got yourself a double, if not even more. Now, in order for this to actually come true, I think you need to pass 3 tests. Number 1, this overall attempt upward can't be derailed. We can't have this kind of dump again because then we'll have to restart a new momentum cycle. Number 2, we need to see a breakout past the last cycle high at about $12 within the next week or so, or enthusiasm is in all likelihood going to die down. Number 3, most importantly, you need to see a cool down period that holds a high bottom. If this breaks out past 12 and then into 15 and then sells off but holds previous resistance at 12 as new support, well, that's incredibly bullish and a strong spot for new momentum and a next wave to be built on top of. As always, though, I will remind you that you can have the best setup in the world, but if there's no momentum actually flowing through the setup, well, it's not going to do much. So you have to make sure that you're seeing at least some bare minimum proof of concept. Right now, it's retaining value very, very well. It's showing proof of concept, but that can change on a dime. So make sure to keep focused on risk management and proof of concept. Anyways, that caps off the video. Make sure to hit that ravishing like button and also subscribe. If you want to get 50% off our ZipTrader U program, I will put a link to that below. Coupon code recession50 expires a week from today. If you'd like to get up to 13 free stocks when signing up with Moomoo, an excellent broker and trading platform, I will put a link to them below. Have a good one, folks, and I will see you in the next video.